It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg brief. Here's what you need to know. Momentum cooling off. Stocks and bonds retreat as Wall Street returns from a long weekend. Gold hits a record high. That's ahead of a big week of jobs data. JOLTS, ADP, jobless claims, and of course the non-farm payrolls report all on deck this week. And President Trump says India has offered to cut its tariff rates to nothing. So let's take a look at where we stand markets-wise as we kick off a new month, the month of September. Don't forget we had that sell-off on Friday, tech-related, of course, but we did hit a record for the S&P Thursday. We do seem to be setting up for a lower open today, though, at least in the early going. Not so much with yields. If you look at the 10-year, you're seeing a almost 5 basis point rise in yields. Same for the 30-year. In fact, it's across the board, across all tenors, as markets approach the FOMC meeting in just a couple of weeks and before that jobs data. And I want to point to the dollar index as well. It's actually a little stronger today. We have a weaker euro, weaker sterling as well today. Let's move the boards because we want to take a look at commodities. Very interesting move in gold in particular, up another 0.1%, but it hit a record. It topped $3,500 an ounce a little earlier on. And we want to keep our eyes on crude oil as well, gasoline, and of course natural gas, as we see Putin, Xi and India's Modi meeting and doing some deals. So I also want to let you know that we have some preliminary August consumer price reporting for the euro area, rising 2.1% year over year. That was the estimate, and a tick up indeed from the previous month. So again, euro area CPI preliminary pricing coming in up 2.1%. Now the euro had been weaker versus the US dollar in advance of that, staying weaker, maybe just a touch even weaker, as we see the month-over-month price rise 0.2% and the year-over-year price rise 2.1%. So let's get over to London now for some stocks to watch. Here's Valerie Titel. Valerie.
Good morning, Bonnie. Let's start with Nvidia, because this can be blamed for a lot of the adverse price reaction on Friday, and it is falling again for a second session in a row, down nearly 1.5% in pre-market trade. This is off the back of that Wall Street Journal article talking about how Alibaba is developing a chip to compete with Nvidia's H20 in China. Let's move over to Tesla. A bit of a disappointment when it came to their sales figures in India. This is a market that they're trying to get into. Tesla shares down 0.7% on the back of that disappointing sales figure in India. And lastly, I want to head over to Europe. Nestle shares are falling this morning. They were down at least 4% at the open. They've paired that loss, Bonnie, now down 0.9%. This is all on the back of the CEO being ousted due to a relationship with a subordinate. Bonnie. Exactly,
Valerie. A lot going on in the CEO sphere today. Thanks for that. And in just moments, we're going to be taking a closer look at the dollar and its movements with Valentin Marinov of Credit Agricole. Later this hour, we'll speak with Amy Wu Silverman of RBC. She joins on where stocks might be headed this month. A slew of data, though, coming throughout the week before the September FOMC meeting. Starting with JOLTS Wednesday, jobless claims on Thursday, and the payrolls report Friday. Valentin Marinov of Credit Agricole writing this, quote, key for the Fed rate expectations and thus the US dollar outlook could be the unemployment rate. Assuming that the unemployment rate remains close to historic lows and the headline print does not disappoint, we think that many Fed-related negatives are in the price of the US dollar by now. Valentin joins us. He's head of G10 FX research and strategy at Credit Agricole. So in some ways, that's an optimistic way of looking at things, Valentin, because there's a lot going on, particularly around the Federal Reserve at the moment. What makes you say that perhaps the lows might be in for the dollar?
Good morning. As highlighted, I believe that a lot of Fed-related negatives are indeed in the price of the dollar, and the labor market data, the upcoming payrolls on Friday, could play a key role in that. It is the case that whereas the markets may want to focus on the headline print, the key for the Fed outlook would be the unemployment, or indeed how tight the labor market in the US remains. So with that in mind, I think the 2 rate cuts that the markets are pricing in for this year from the Fed, followed by another 3 cuts next year, is fairly dovish view already. We also think that the US economy, if you take a more longer term view, is likely to prove more resilient than consensus is expecting, and that could mean that the Fed would disappoint the dovish expectations that the market have at the moment. So with that in mind, I think that a lot of negatives are already in the price of the dollar. And assuming that our scenario does play out, the dollar should start recovering in late 2025 and early 2026.
You say that there might be a level that would keep the unemployment rate unchanged. What would that be? 70,000, 80,000?
Well, I guess it's a range, and as highlighted by a number of Fed officials, it is between 50 and 100K. Clearly, the market consensus has adjusted to that, and that kind of highlights that the bar for a disappointment going into the Friday sprint is quite elevated indeed. And as I was highlighting, the Fed is looking at the extent of tightness in the labor market rather than the labor demand or supply in isolation. So from that point of view, I think where the market sees the Fed going from here is about right. 2 rate cuts is essentially as dovish as it will get this year. So from that point of view, the data has to be really weak, something below 50K or indeed closer to essentially no job creation at all, to really see the rates markets readjusting their Fed view and that hurting the dollar.
Is the dollar expressing any kind of view about any erosion of Fed independence right now, Valentin? You say most, if not all, of the Fed negatives are priced in, but is that priced in given that we're still waiting on a court ruling about whether President Trump can fire Lisa Cook?
Yes, by all means, I have to say that the US data, or the quality thereof, is only one of the many drivers that are moving the FX markets at the moment. And as you rightly said, the attacks on Fed's independence represent an important driver in and of itself. And we like to use real rates, 5-year US real rates, as a measure of that. Those real yields have been slipping of late, and that could explain some of the dollar weakness. Then again, we remain of the view that despite Trump's attacks, the institutional framework backing the Fed is still quite solid. So any interference in the ongoing or the future Fed decision could be kept in check by that. So from that point of view, once again, the conclusion we draw on the back of that is we've seen already a lot of negatives in the price from that point of view. Clearly, there are risks, and clearly a potential further escalation of those attacks on Fed's independence are one of the key downside risks to our current dollar view.
I want to ask you about the euro, Valentin. We are seeing it weaker today, and we did get that print just a few moments ago that inflation did tick up that slight bit. Does that, in your view, make another cut any more likely?
Well, I guess in comparison to the Fed, the ECB outlook is considerably more boring. We think that the ECB is done cutting rates, and today's data is confirming that. With respect to the price action, I think on the day it's quite interesting because actually different from the data, I don't think data is driving the price action today. It's really the bond vigilantes in the developed markets that are driving the price action in the FX markets. We see the sell-off at the long end of the Japanese, the UK, even the European really bond markets intensifying. And I guess going back to the euro has a problem, and that problem is France. And we have that vote of confidence on Monday, which could result in the collapse of Bayrou's government. That could be also followed by new elections. And we therefore think that with respect to the euro, yes, the ECB outlook, inflation and all of that may play a role, but right now for us key is the political outlook in France, and that doesn't bode well for the euro. We therefore advise cautiousness on euro crosses in the near term.
You say the bond vigilantes are driving the FX price action today. Is it pretty orderly, this FX price action, or would you be expecting perhaps some ructions in the markets?
Well, I guess you're referring to another trust moment in the gilt market, potentially. These events, if you want to call them this way, are difficult to predict. What is worrying is, to answer your question, the moves so far have been fairly contained in comparison to those episodes in the past. What is worrying, however, is the trajectory. There's no backing down of long-term yields, and that underpins the concern that's in the market that the trajectory of many fiscal policies in the developed world, including Europe, in the US, is not sustainable. So with that in mind, I guess ultimately the question that is on everyone's mind in the FX markets is which economy can afford to really maintain that seemingly unsustainable trajectory. And I'm afraid to say that's not Europe, that's not Japan. The only country that comes to mind that will be still able to sell its debt to foreigners, even despite sustainability concerns, will be the US. So from that point of view, I think it's quite justified that the dollar has emerged as one of the better performing currencies on the day, because even if fiscal trajectory remains unsustainable, what really matters ultimately is the growth outlook, and the US is likely to continue to deliver more growth than anyone else in G10 in our view.
All right, a stronger dollar. Valentin, thank you so much for joining us this morning. That's Valentin Marinov of Credit Agricole. Now to other top stories trending on the terminal this morning. UK 30-year bond yield rose to the highest since 1998, putting further pressure on Prime Minister Starmer's government to regain market confidence. We were just speaking about this with Valentin. This comes ahead of an autumn budget where Chancellor of the Exchequer Rachel Reeves is under pressure to find savings or raise taxes to improve the UK's fiscal position. Russia's Gazprom says it signed an agreement to build the long-anticipated Power of Siberia 2 gas pipeline to China via Mongolia. Beijing has yet to confirm the agreement. Discussions around the mega project have been stalled for years, and an agreement will be seen by the Kremlin as a major political win. Tesla's India debut underwhelms. According to sources, Tesla received orders for just more than 600 cars since it entered the Indian market in mid-July. Bloomberg had earlier reported that Tesla originally aimed to utilize its 2,500 car annual quota this year. Coming up, President Trump claims India has offered to drop their tariffs on U.S. goods to zero. Meantime, Prime Minister Modi is in China with Putin, Kim and Xi. More next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. President Trump posting on Truth Social that India offered to cut its tariffs on U.S. goods to zero. The current tariff rate on Indian exports to the U.S. stands at a steep 50%. Our team coverage starts right now. Bloomberg's D.C. breaking news editor Katya Plishinska and South Asia editor Rushi Bhatia. So, Katya, what exactly has Trump been claiming that India is, in fact, offering?
Good morning. Indeed, Trump posted on Truth Social yesterday saying that India has offered to lower its tariff to zero, but it might be too late. And then Trump reiterated the concerns that he had expressed about India before, specifically that India has very high tariffs on the U.S. goods, while at the same time selling a lot into the U.S. Trump called the U.S. India's main customer, but he also complained about India's purchases of Russian oil. He's concerned that this money flowing into Russia helps oil the Ukraine war machine, but also Trump would like India to buy more oil and military equipment from the U.S.
Well, Rushi, as we know, Prime Minister Modi and the Russian president are actually meeting. What are we hearing from India's side regarding U.S. trade talks and whether this offer is even likely to be true?
Well, there's been no official comment on U.S. President Donald Trump's Truth Social post that he posted on Monday, but we did hear from the Indian Commerce Minister Piyush Goyal just a while ago, where he said that the talks between India and U.S. on trade and a bilateral trade pact are still going on, which kind of goes to show that the door for resolving the talks or for resolving the impasse is still open. In fact, this is coming in at a time when the U.S. president and the U.S. administration has doubled down on the tariffs, as well as doubled down on hitting out at various top Indian billionaires as well. Remember, but the fact that the Indian government and especially the Commerce Minister Piyush Goyal saying that the talks are still underway, shows that while the trade talks per se may have hit a stumbling block, the informal talks, especially at the level of the foreign ministry, is still going on. That's the sense that we have on this issue so far. So far, remember, 5 rounds of talks have already happened. The 6th round of talks that was supposed to happen in the month of August has been stalled. There is no clarity on any next date for it, but it does look like that there will be some sort of a resolution to this issue in the next few weeks.
Rushi, Bloomberg also reporting that Brazilian President Lula is expected to hold a virtual meeting with BRICS leaders about trade next week. What do we know about that?
Well, Lula has made it very clear that he doesn't want this virtual summit to be an anti-US summit of sorts. But remember, this is coming in at a time when India had a very successful meeting with both the Chinese President Xi Jinping as well as the Russian President Vladimir Putin as well at the SCO. So this meeting is going to be an important one to watch out for. And coming in the aftermath of heavy tariffs on countries like India and Brazil, both of which are facing 50% tariffs. So this one is going to be an important meeting to watch out for, where all the BRICS countries, Brazil, Russia, India, China, will be getting together to really chart a way forward as to what these nations can do to emerge unscathed from US President Donald Trump's tariff.
We'll be watching it very closely. Our thanks to you, Ruchi Bhatia, there in New Delhi, and of course also to Kasia Klimashinska in Washington. Well, over in China, Presidents Xi Jinping and Vladimir Putin held a brief bilateral in Beijing during a major military parade in the capital. Putin spoke of the nation's strong ties.
The memory of being brothers in arms, trust, mutual assistance, and firmness in defending common interests formed the basis of the comprehensive partnership and strategic cooperation between Russia and China in the new era. We were always together then. We remain together now.
Reports out of Korea that North Korean leader Kim Jong-un has now arrived in Beijing as well. For more, I'm joined by Bloomberg's Min Lo, who is in Beijing. Min, you were at the event yesterday. What are Putin, Kim and Xi trying to signal to the West this week?
Yeah, I mean, it's going to be an iconic image, right? Those 3 strongman leaders standing on that dais above the portrait of Mao Zedong in Tiananmen Square. It is a show of unity in some ways to really challenge that Western-led international order, and particularly significant for Kim Jong-un because it is his first trip to China since 2019, and certainly one of the very rare opportunities for him to be on the same stage with many of these global leaders. For President Xi, there are 26 leaders gracing that big event. For him, it's really a big endorsement of the event. And Kim Jong-un just toured a new missile factory in North Korea ahead of this trip to China. He unveiled this new program for the development of another of its intercontinental ballistic missile. And really, it's in defiance in some ways of China, of the US and South Korea, which has been pressuring the country to end the nuclear program. But there, Kim Jong-un will be tomorrow, showing the world that he has powerful friends in important places backing him, and Putin, of course, signing that important deal with Xi, Gazprom, the state-owned oil and gas company, going to build this new Power of Siberia 2 pipeline that will go through Mongolia into China to divert a lot of that gas pipeline sales that it used to sell to Europe now to China. It's going to be an important lifeline for a company that has seen a huge profit loss after the Ukraine war.
Particularly in a week where the US Treasury Secretary Scott Bessent has said they're going to be looking at sanctions this particular week. So other than that pipeline, what tangible results have come out of this meeting, as if that wasn't enough, Min, of the Shanghai Cooperation Organization security bloc?
Yeah, when it comes to the Putin-Xi meeting, according to Xinhua Chinese state media, there have been more about 20 bilateral cooperation documents spanning many sectors, from artificial intelligence to health to education to scientific research. China is also agreeing to grant visa-free arrivals to Russian tourists on a trial basis, and that's expected to boost tourism for both countries as well. And at the same time, from the SCO summit, China really highlighted how it is going going to increase loans and investments to BRI, to SEO countries. It's going to create this new development bank as well, an SEO development bank. And that is a big win for President Xi because it's been mooted many years ago and didn't really gain traction until now when all the members come together and finally decide to back this idea.
And no doubt more to come with Kim Jong-un and, of course, Narendra Modi there as well. Min Lo, thank you so much in Beijing there. Coming up, a warning from Ray Dalio. The hedge fund billionaire sounds the alarm on U.S. policies. And what else is making headlines in your front page news? That's coming up next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the FT, Ray Dalio warning President Trump's America is drifting into 1930s-style autocratic politics. He said gaps in wealth, gaps in values, and a collapse in trust were driving more extreme policies in the U.S. His comments to the FT mark a rare criticism of President Trump by a prominent financial figure. Next up, on the Wall Street Journal, President Trump facing a challenging September both at home and abroad. The story lays out what's on the agenda this month, including negotiating with Congress to avoid a shutdown at the end of the month and uncertainty about the legality of his tariffs. Trump also gave Russia and Ukraine an early September deadline to move forward with a peace process or face possible U.S. retaliation. And on the New York Times, Eurasia's leaders eagerly meeting Russia's Vladimir Putin at the summit in China. The Times notes Putin gleefully holding hands with India's Prime Minister Modi. Russian Prime Minister Putin also meeting with leaders from Iran, Turkey and Vietnam. This is Bloomberg. It's 5:30 in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Momentum cooling off. Stocks and bonds retreating as Wall Street returns from a long weekend. Gold hits a record. This all ahead of a big week of jobs data, JOLTS, ADP, jobless claims, and of course the non-farm payrolls report all on deck. And President Trump says India has offered to cut its tariff rates on U.S. goods to, quote, nothing. Let's take a look at markets, though, because it's shaping up to be a fascinating day. As Ed Yardeni says, a new wave of sovereign risk washing over European economies. And you're certainly seeing that in U.S. yields as well, with the 30-year almost hitting 5% today. The 10-year yield up 5 basis points there at 4.28. Now, we are down for S&P futures. Remember, we hit a record Thursday, and then we had that tech sell-off Friday on thinner liquidity. Traders coming back to start a new month. We'll see if we remain lower, but certainly the VIX is above 15. The dollar index stronger today, and that is partially thanks to those fixed income moves. Let's flip up the board and see where we are with commodities, because again, we're seeing gold at the records. We're off it right now, but still higher. A lot playing in here. It's not just the little tantrum that we're seeing in fixed income markets. It's also, of course, Fed independence and the possibility of a jobs report that disappoints this week. You're also seeing crude, both Brent and WTI, higher by around 2% plus. All right, let's get to some stocks to watch now. Over in London with Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with NVIDIA, because the weakness that kicked off the equity move on Friday is continuing for this stock, in the red for a second session in a row, down more than 1%. There is no real catalyst for this weakness, Vani, but perhaps the market just rethinking China's own homegrown chip capabilities after that Wall Street Journal report on Friday. Moving over to Tesla, another Mag 7 stock in the red this morning. This is off the back of some disappointing debut sales numbers in the India market. This is a market it's been trying to break into, but it's facing some stiff competition from the likes of China BYD. So we're seeing Tesla down 0.4% in pre-market trade. Lastly, let's end on a European stock. This is Nestle. The CEO has been ousted due to a relationship with a colleague. The stock sank as much as 3.7%. Now still in the red, down 0.9% as this marks more instability for leadership at Nestle. Vani.
Valerie, thank you so much. Valerie Teitel there in London. RBC's Amy Silverman looking at the options market as investors head into what's historically the worst month for the S&P 500. She writes this: the left tail still remains quite reasonable, as well as in the fixed income ETF proxies. I'm pleased to say Amy joins us now. She's head of derivatives strategy at RBC. So in the options market, the left tail up until now remaining quite reasonable. Amy, does that all change today given what we're seeing in European fixed income markets, but also in the US?
Yeah, good morning, Bonnie. Look, we are starting to see it tick up, and it's not too surprising. I think if you just take everything, headlines, whatnot, off the table, we are just going into a seasonally weaker part of the year where you typically do see VIX higher and spot returns lower. I don't necessarily think this year is any different, and investors know that. So they're kind of positioning, but I think this has been a story this year where both the left tail and the right tailed upside and the downside have both been risks for investors, just depending on if you need to catch up or if you need to protect yourself.
So what will we see getting priced in today, given that, as I said, September is traditionally, not a great month, but when has tradition ever helped us out here in the markets?
True. Yes, past performance is obviously not necessarily a future performance. I would say what investors are probably going to look for is from that slew of quite important data points that you mentioned earlier. And, obviously we're in a framework right now where the market is expecting something for September. And I think the data points that we get this week are either going to cement that or maybe they toss that back up into the air. But right now, when you look at the money straddle, so essentially what the magnitude of mood is pricing, that has not changed too much from a week ago, and we'll see if that changes as just you get more folks in their seats and repricing things as the data comes in.
Amy, you had talked about, your paddling duck analogy, which we use quite often, in the news business as well, where things seem calm on the surface, but there's a lot of paddling going on underneath, and that's what you're saying, had been perhaps going on. Where are you seeing it most particularly right now, and what does it augur?
Yeah. So, yeah, I do love that analogy. I keep having to bring it back because I just think it's so symbolic of, what you see not only in terms of S&P versus the factor rotations underneath, but for us specifically, the spread you see between index volatility. So something like a headline VIX number really not being all that high, and yet you get 4 or 5 standard deviation moves either in single stock volatility or in something like growth factor, momentum factor versus something like small cap or value. I think that one of the things investors have been looking for a long time is this idea that this huge concentration we see in the market, Ronnie, should broaden out. So whether or not there's going to be this breadth widening trade. And then the question of it's just always going to be large caps day in the sun or if small cap will finally have a day in the sun. I think that's what they're really looking for this year, specifically as we head into September, because it tends to also be the case that rate sensitivity plays a lot into these factors.
Amy, what will you be looking at in order to decide whether these moves that we're seeing to kick off the month and frankly Friday as well are just jitters, or is something maybe deeper that could have wider ramifications for the market?
Yeah, so it's interesting, maybe just to rewind it back to Liberation Day. One thing we had noticed post-Liberation Day was that equity skew was very sticky. And just to translate that, all it means is, there had already been demand for hedges during this specific time period, even, as far back as Liberation Day. And the question is, now that we're actually here, now that we've actually rolled into this time frame, does this remain sticky? So does that stickiness continue? Or, will the market win out again by blowing through new at the highs that we've seen over and over again? Because I do think there has been this cohort of investors who have been kind of taken aback by the rally that we've had, have been a little bit underpositioned, but still believe there's a reckoning. They just think it's a matter of time before it happens. They keep having to roll that time frame forward.
The move index is ticking up a little bit, but we're still, extreme lows. The VIX is above 17, but that's certainly not an indication of panic or anything like that. How much of the concern around Fed independence, which does seem to be getting a little bit more, as we await court case decisions and so on, it does seem to be getting a little bit more front and center. How much is that priced into options trading at the moment?
Yeah, I've been noodling on this for quite a few weeks because to me, the market really didn't react at all to the news on Cook. Obviously, a little bit had a tantrum during Powell. So it was almost like the Fed kind of priced in that possibility when there was the kind of like trial balloon floated from Trump that potentially, he could fire Powell. He obviously took that back. But in some ways, the Cook news is the same. I would say I'd really watch that, the kind of tariff decision, like how that goes on with the courts. But then also, this Friday, there's been talk about, potentially not having BLS data every week. I think it's like a conglomeration of all those facts. Obviously, that's the difference. But I do think you're going to start to get a little bit more angst if you get some Truth Social post Friday after NFP is talking about the questions on BLS data, plus this potential trial again on the legality of some of the tariffs.
Plus, of course, the hearing for Stephen Miron on Thursday,
Yes.
and it just goes on and on and on and on.
On and on.
Amy, we have the non-farm payrolls report Friday. What would cause flows to shift, let's say, in the markets that you watch?
Yeah, look, if we get a number, I think two things. I think one, we've learned that revisions can matter just as much as the number itself. So I would say, anything that happens on that front. But then secondly, if you get something that's just really kind of multi-standard deviations out, what that means for the rest of the rates curve. So, I think September is being priced in, but the question is, what does that mean for number of cuts and future cuts? And again, how does that impact the factor trades like small cap and value versus large cap and growth?
All right, well, we hope to talk to you again soon. And thank you so much for joining us this morning, Amy Silverman of RBC Capital Markets. Now, on to other top stories trending on the terminal this morning. UK 30-year bond yields rising to the highest since 1998, putting further pressure on Prime Minister Keir Starmer's government to regain market confidence. This comes ahead of an autumn budget where Chancellor of the Exchequer Rachel Reeves is under pressure to find savings or raise taxes to improve the UK's fiscal position. Russia's Gazprom says it signed an agreement to build the long-anticipated Power of Siberia 2 gas pipeline to China via Mongolia. Beijing has yet to confirm the agreement. Discussions around the mega project have been stalled for years, and an agreement will be seen by the Kremlin as a major political win. Tesla's India debut underwhelms. According to sources, Tesla received orders for just more than 600 cars since it entered the Indian market mid-July. Bloomberg had earlier reported that Tesla originally aimed to utilize its 2,500 car annual quota this year. Coming up, President Trump says India has offered to lower its tariff rate on U.S. goods to nothing. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump taking to Truth Social to pressure India as negotiations continue. He writes, quote, "They have now offered to cut their tariffs to nothing, but it's getting late. They should have done so years ago." This all coming as India is now facing a 50% US tariff. Let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. So, Brendan, has India actually suggested it may drop its US tariffs to zero? Because we're hearing from the US side, but not much as I've seen from the India side.
Yeah, exactly. We haven't heard any official confirmation of this from the Indian side. We did hear the Indian trade minister say that there is a dialogue that's continuing to go back and forth between Washington and New Delhi. But this is a long way from where we were just a couple of months ago. India was in the front of the pack to get a trade deal with the U.S. and the Trump administration. They were sounding very confident that they would get the breakthrough that they needed, and it would come in phases, 2 or 3 phases of talks into the fall of the year. But that's all gone away, and we've heard the Treasury Secretary Scott Bessent talk about India's recalcitrance, and we've heard the White House trade advisor Peter Navarro criticize India for buying Russian oil and calling it Modi's war. And so the rhetoric is really heated up, and that's not an environment where trade negotiators are going to sit down and make any progress. The goal from the two sides now, it seems, is to cool the rhetoric, try to get back to the negotiating table, and press forward with the progress that they've made so far.
Yeah, we'll see how these photos with Putin and Modi speaking go down in Washington as well. I want to ask you about last week's appeals court ruling about tariffs. What does it mean for President Trump's tariffs, the state of them? I know Scott Bessent said he's going to write a memo and it's going to go as far as the Supreme Court.
Well, legally speaking, for Trump and his tariffs, it was strike three, but he's not necessarily out yet. He still has an appeal to the Supreme Court that could happen. We don't know if that's going to happen imminently or whether it will take weeks for them to get that case ready. So the case is effectively going to go to either the Supreme Court or will be sent back down to the lower court to narrow its scope. So in the meantime, those tariffs stay in effect. American importers are paying those, and it's hurting small businesses a great deal. You heard the National Retail Federation say after that ruling late Friday that this is not relief that they're looking for, and it's hurting their membership, retailers, merchants, small businesses mainly. That these tariffs are still going to impose a lot of uncertainty over the coming months as this plays out in court. It's not going to be resolved anytime soon, and so things like hiring and investment plans, just get pushed out into the future, and the big impulse that Trump wants to see to the economy just gets pushed further out into the future.
Brendan, thank you so much. That is Brendan Murray there covering trade for us in London. Treasury Secretary Scott Bessent suggested in an interview with the Washington Examiner that President Trump is weighing declaring a national housing emergency in the fall. For more, we're joined by Bloomberg's Kasia Klimashinska. She's back with us from Washington, D.C. So, Kasia, from the court rulings on tariffs and a potential declaration of a housing emergency now, what it doesn't mean the Trump administration is trying to do, given that we know we're staring down the barrel of midterm season?
Hello, indeed, yes. In November of next year, there will be the midterm elections when Americans will be able to choose their new members of the House of Representatives and a third of senators. So the balance of power in Congress is in play, and the Trump administration is trying to kind of dictate the key themes by spotlighting the housing market, tariffs, trade, inflation, and interest rates. And so, as you mentioned, Treasury Secretary Scott Bessent kind of surprised us yesterday, saying that the Trump administration is looking at some sort of an emergency action that would make housing more affordable. Definitely, this has been an issue since COVID, when the housing prices skyrocketed and also interest rates came up and remained high. So that's an area where indeed the Trump administration could score some points with the voters.
And again, this is an interview with the Washington Examiner, and we don't have other details. Let's turn now to the Federal Reserve. What's the latest on Governor Lisa Cook's case against the president? What would we be expecting to happen with that this week? And also, of course, with the Fed governor pick, Stephen Miron.
Indeed, we expect a lot of action this week. Today, there will be another court hearing for Lisa Cook. Last week, President Trump was trying to fire her, get rid of her, and she filed a lawsuit saying that there is not enough of a reason for President Trump to move and remove her from the Federal Reserve Board. So there was one hearing in front of a judge on Friday. It sounded like the judge isn't sure whether she can actually rule on this matter. She asked for more information, and you will hear more from Lisa Cook's lawyers today. And then on Thursday, Congress is back, and Trump pick for Federal Reserve, Stephen Miron, will have his hearing before a Senate panel. He is likely to advance to go to the Senate floor, possibly even before the Fed meeting later in September.
Kasia, a lot to keep an eye on this week, even with it being a holiday-shortened week. Thank you so much. That is Kasia Klimashinska. Now, turning to private capital, the Financial Times is reporting that Apollo is planning to launch a $5 billion sports investment vehicle. This comes as more and more of these private firms have been pushing to get into the sports finance space. Joining us now is Bloomberg opinion columnist Paul Davies. So we've seen Blue Owl, Ares, CVC, they've all lent into the space, Paul. What kinds of returns are they expecting to get, given that, you know, these are not the least risky of bets?
I mean, I think it'll be a mix of returns. There's obviously a lot of lending involved in these sorts of things as well as kind of equity ownership of football clubs and that sort of thing. But I think the important thing here is that this is a sign of, the growing maturity of sports finance. I mean, it's long been an interesting, esoteric, a private area of finance, but also just the sheer scale of the amount of revenue passing through the industry now. We've just seen the transfer window for buying new players close in English football, and we've seen a record £3 billion, or about $4 billion, spent on new players. That's a huge amount of money, up about 50% versus last year. But, you've got to set that against the kind of revenue that these clubs are making. The total income for English Premier League football clubs last year was about £6.6 billion, according to Deloitte Football Finance people, and that's going to rise to about £6.9 billion this coming season. So it's just a sign of the huge scale of the business now.
Yeah, I mean, it's really phenomenal. But this is also permanent capital, which is, it's really, when you think about it, quite surprising in many ways that, permanent capital will be allocated in a place where, what if you see a team relegated, for example, or what if fans suddenly decide that they, are not going to support their team as much? I mean, is it not, it's been a place where mainstream lenders have avoided lending to for those very reasons. Why does a private lender now think that it's a good idea to allocate permanent capital here?
I mean, mainstream lenders and private lenders have been involved for quite a while. It's long been an interesting area, but the numbers involved have just been a lot smaller. So it's been hard to kind of, make large-scale sort of permanent funds out of this sort of business. But the other side of it, I mean, in lots of these sports, and especially, football, English football, there is just much more certainty of revenue now. The kind of the income that everybody gets every season from sort of media deals and from merchandising is so much more reliable than it used to be. And on top of that, there's a much more sort of real estate focus to what a lot of teams are doing in terms of, stadium redevelopments. And you can kind of, you can secure a loan against physical assets, and you can have kind of, predictable revenue offtake against those assets. And it just makes it a much safer and kind of more interesting, long-term investment for some of these funds, I think.
It really is fascinating. I'd urge everybody to read Paul's columns on all of this. That's Paul Davies there of Bloomberg Opinion. Coming up, we have a host of data on deck this week. Your week ahead is next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead this week. Plenty of economic data. We get the latest PMI data starting today, 9:45 and 10 o'clock Eastern time. And then a slew of jobs data coming with JOLTS Wednesday, ADP, jobless claims on Thursday. And of course, rounding out the week with the August payrolls report on Friday. Let's get to some micro movers now. Nvidia extending its Friday slump and leading the Mag 7 lower, at least in the early going, down about 1.4% in the pre-market. Fortinet, Morgan Stanley cutting to underweight. That price target set now at $67, and you can see that the market is not taking that well, and the pre-market is down 2.6%. And we're also watching Alibaba ADRs, this after they surged in Hong Kong on an AI revenue surge. Let's get to some macro movers too, because the bond vigilantes are awake today, it would seem. For the first trading day in September, you are seeing yields rise in Europe and in the United States. That's having an impact on currencies as well. And if you'd like to take a look at S&P futures for your first trading day of September, they are pointed lower right now. That's after the sell-off of Friday. However, it could all change. Let's end on a positive note. That's it for Bloomberg Brief. Surveillance is right ahead. This is Bloomberg.